Well, a looming exit. How will the divestiture of Barclays Bank PLC from Africa impact Barclays Bank Kenya? Good evening and thank you very much for joining us. Of course, you have seen Jeremy Awori, Managing Director of Barclays Bank, joining us here for the bell ringing ceremony. I'll be joining him to discuss how the looming exit of Barclays Bank PLC from Africa impact their local operations. And of course, later on, I'll be joined by Edwin Chui. He's a senior research analyst at Dye & Blair. And of course, we'll be looking at the market and how farther down the market is likely to go. But for now, the big interview is coming up next with Jeremy Awori, Managing Director, Barclays Bank Kenya, to help us understand where the company is going from here. Well, thank you, Jeremy, for joining us.
Yeah, you're welcome.
Very good.
Nice to see you.
Please. So, as we start the new year, 2017, what are your expectations, bearing in mind that is another year of elections and we're expected to see a lot of political altercations and political noise?
Yeah, I mean, I personally am sort of looking forward to 2017 positively, not negatively. I think what we've learned from 2016 is you can expect the unexpected. And I think as business leaders, we have to prepare for all manner of situations. But I think there's still a lot of positive things to look forward to. We have businesses that we need to run, and we should focus on executing our strategy. So elections just happens to be one of those things where we're in that election cycle, and we really just hope for a peaceful election process and business to continue.
Mm-hmm. From where you see it or stand, what do you think is going to shape the year, I mean, for the industry?
I think there are several things that will shape the industry. Obviously, we'll see the full effects of the interest rate law coming into effect, and businesses will have to adjust their banking models in particular to this new environment. Obviously, the elections coming in the middle of the year is something that bears on the minds of business leaders in terms of what they do with their businesses. But I think fundamentally we're still out to grow our businesses and to add value to, to both our customers and other stakeholders in the process. So I think those would probably be the big two things as far as the banking industry. That and
when you talk about interest rates, we know for sure that I don't think we have full data yet on the impact of the law yet. But there are some estimates that that credit has gone down by about 10% for the entire industry. I don't know how much have you been impacted by this law?
Yeah, I mean, I think banks will definitely be impacted by the law. I mean, we'll have to wait for the central bank to publish industry statistics with regards to what the full impact has been on lending. For sure, what we've seen is over time, if you look sort of a year back, there were times when lending was north of 20%. I think now we were seeing, I think in October, November, that number had fallen to about 4–5%. So obviously when we start seeing the full year, then we'll be in a better position to know what that means. But I think banks now are focusing a lot on whether they can get the returns that are adequate for their shareholders, given the new environment. So that's where the focus is going to be around efficiency, automation, use of digital channels. That's where I think there's going to be a lot of investments so that we can continue to offer competitive banking services to our customers.
As the Managing Director of Barclays Bank Kenya, I'm very sure you are privy to the data and figures, that goes behind the scenes. Would you be kind enough to tell us, how they are looking like in terms of income interest?
Yeah, I mean, clearly, I can't speak on behalf of the industry, but I mean, at the end of the...
for Barclays.
Yeah, I mean, I can't comment on the financials for 2016 because we're obviously a listed company and that they have to be reported once they've been fully approved by our regulator, and that will happen in due course. Probably around the month of February. Normally that's when that happens, when the accounts have been properly audited. But what we can say is for sure there will be an impact on interest income for banks downwards. So the question really then is whether the volume of lending can make up for the drop in the margins. Like I said before, I think now what banks have to really look at is how do we drive further efficiencies, and at the same time the way we're looking at it as Barclays is how do we get those efficiencies at the same time enhancing the customer's experience? And that's where I think automation and the digital platforms, innovation comes in terms of new products and services that can help fill the gap that is created by interest income. And we've done a few things. So for example, we started a brokerage business towards the end of last year. That's one thing we've looked at. We're getting into bank assurance, which is, we launched a couple of years back, and that's growing very strongly, and we see a huge opportunity there. And there are lots of other opportunities: agriculture, asset finance, mortgages. Yeah, so the advantage of lower rates is it starts becoming more and more affordable for people to take mortgages to buy their own homes, going forward. So there'll be a slight rejigging of the models as we go forward.
And this calls for a lot of innovations as well.
Yeah, absolutely.
Sorry. And when it comes to agency banking model, which has really picked up in this country, you're not mentioned anywhere. Is this something that you're looking at, including mobile banking? I know you're very heavy on internet banking, but very weak on agency banking and mobile banking.
Yeah, I mean, actually, we've actually launched agency banking. You may have seen last year we launched agency banking in a partnership with Posta for the pure reason that I think as we move forward, opening branches is quite an expensive endeavor, and partnerships clearly in the form of agents is the way forward. And we've seen those agents grow and take services to the most remote parts of Kenya. So we've launched agency banking, and it's a growing opportunity. We continue to look for further partnerships, that where people can actually find our banking services. In terms of mobile banking, we have a very active mobile banking platform, and we've got a number of innovations that are unique to us. So for example, today, we're one of the few banks where you can send money through a product called Cash Send to any mobile number. And it's agnostic whether it's Safaricom, Airtel, Orange. So you can actually send money to them, and then you can go and withdraw it from our ATMs and/or our agents. So we're actually on the agency banking side, the first bank where you can actually send somebody money, they can go to the agency and withdraw that money in cash without any card or without any account. So that's something, again, where we talk about innovation actually coming into real practice.
And what about retail investors? I mean, in the past, you have not been very, very heavy on retail investors. Are we expected to see somehow a shift towards, more aggressive reach towards small investors?
Yeah, I mean, we're contrary to popular belief, we actually bank the full spectrum of customers. So we're actually a retail bank, bigger than we are a corporate bank. I think people think maybe we're a corporate bank first and a retail bank second. We're actually one of the biggest retail banks when you actually look at the size of our retail balance sheet. Maybe not on the total number of customers, but in terms of actual money that we look after for people and transactions, we do. For our customers, we're in the top 3, top 4 retail banks. We see a lot of opportunity there. We're the largest credit card issuer in this market. And we've got a whole series of other products and services that we offer. We've got our very popular Zidisha product, which really took off to encourage savings. That allowed people with as low as 10,000 shillings to get very high rates prior to this interest rate law. We actually had the highest rates that we've got. I think one of the areas that we see a lot of opportunities around business banking and supporting SMEs. That's a core part of our strategy because it's a core engine of growth for this economy. So we want to support people running their own businesses, to grow their businesses, to create employment, and to create opportunities for their employees to actually be able to achieve their dreams. So that's a big part of growth for us as we move forward.
I also want to find out from you the looming divestiture of Barclays PLC from Barclays Bank, Barclays Africa. How is it likely to impact you as a local entity?
Yeah, indirectly it doesn't really impact us too much because Barclays PLC owns shares in Barclays Africa Group Limited, which is listed on the Johannesburg Stock Exchange. So, and there, Barclays Africa Group Limited are the owners of, or are the majority owners of Barclays Bank Kenya. So for us, it's very much business as usual. Our strategy continues without change. We're very focused. Our core shareholder is very supportive of our business. So for us, we are standalone. Very well capitalized, very liquid. As I say, our strategy is there. We're executing it. That's why you see us getting into new businesses. People are saying there's the possibility of you closing. I just want to really reiterate, we're very much open for business. We are growing our business, and there's going to be lots of innovations that we'll be launching even this year alone. In fact, in the next few weeks and months, that will really show how confident we are about the Kenyan economy and the Kenyan market. and are busy executing that strategy.
And we have also heard from Barclays PLC that they plan to divest completely from Barclays Bank Africa. If indeed they go ahead and divest completely or dilute their shareholding to zero, what will happen? Are we likely to see a situation whereby now you have to be you're likely to be forced, to be paying for using the name Barclays, or what happens?
Yeah, I mean, I don't think there's been any decision to say that they want to divest completely. So that decision hasn't been made. What they've said is that their reason for their divestiture is because of regulatory and accounting deconsolidation. That's the core reason. It's got nothing to do with the attractiveness of Africa. In fact, what the CEO of Barclays Bank PLC just earlier said is he would actually like to retain a stake. But obviously, as they go through the sales process, then that will identify who they sell to, the terms they sell to. They've actually said they would prefer, if they could, to retain a stake so long as it meets the regulatory deconsolidated position. So
and we're talking if they could.
Yeah, but it's their choice. They're the seller.
Mm-hmm.
Yeah, they're not forced to sell to somebody or not. They have to sell on terms that they feel comfortable with. Mm-hmm. So I would be, I think it would be premature to say that they're going to divest entirely. But let's see. I mean, this process is a significantly complex process, mm-hmm. At a fairly complex time globally for banks. Yep. Yeah, so when you look at the kind of price tag you're looking at, you're running into billions of dollars. So, other international banks would also be faced with the same challenge. So, I think let's see how that process unfolds. For us, I really reiterate, we just continue as business as usual. My day job hasn't changed. Mm-hmm. Yes, we have to manage this process, but I encourage our customers to be with us. We've been here 100 years. We're now into the second century, and we're looking forward to what that holds.
Good. Thank you very much, Jeremy, for joining us here, and of course for offering us that insight.
Thank you so much.
Thank you very much.
Thank you.
Jeremy Awori, Managing Director, Barclays Bank Kenya, joining us here on Trading Bell to help us understand where the bank is headed and, of course, the dynamics that are likely to shape the year 2017. This is the Trading Bell. Well, I look at how the market has moved, and of course how shares have oscillated in the last 1 week. Joining us in studio is Edwin Chui. He's a senior research analyst at Dyer & Blair, helping us here to understand the figures. How low is the market likely to go? Do you have that in mind?
No, we can't be sure how low it's going to go. But what we can say is that you can't be sure what the bottom is going to be until it's actually defined. Mm-hmm. And the problem with waiting for the bottom to be reached is that at that point, there may be no volumes. Because imagine if we know the bottom has reached, we'll only know when it actually starts coming back up. Mm-hmm. And at that point, if you want to go in, those who are in won't be willing to get out. Mm-hmm. So what I would say is that the market is probably at lowest it could be for someone to go in.
To go into the market.
Yeah.
And what are the fundamentals, that are forcing the market to remain so bearish in the last 19 days?
A lot of it has to do with a very huge level of uncertainty that is coming from external sources and internal sources. So internal sources, we have our election and our politics starting to heat up. And what that means for the market is that foreign investors are sort of afraid and they stay off the market. And then what that means for our local institutional investors especially is they don't want to go in because having been in a bear run for 2 years, they've already faced too much losses that they are not willing to sort of take a risk and go into the market. And then externally you have the confluence of the election of Donald Trump and no one knowing what kind of policies he's actually going to implement, as well as the other things happening in Europe, with Brexit, with elections coming up in Germany and France, all of which are so sizable and would have an indirect, if not direct, impact on our economy.
Mm-hmm.
Yeah.
And now, bearing in mind that President-elect Donald Trump is being sworn in less than 24 hours from now,
Yeah.
and bearing in mind that the Kenyan elections are about 7 months from now,
Yeah.
what pictures should we start seeing going forward?
I would say that initially people are going to stay off the market, both internationally and even here, as they wait to see what policies are going to go day one. But I would advise people to go in because even when you take Trump as a case in point, the expectation that the dollar is going to go high is solid. It's easy to see why it will go high. But at the same time, we should expect that Trump and his advisors will realize that a strong dollar is not in their very best interests. Mm-hmm. And maybe they are going to take steps that are going to either slow that down or even revert it. Mm-hmm. And then when you think about other things like Brexit and all the other things that are likely to happen, these are things that we have known for a long time now. These are things that you expect that most investors have already priced into their decisions and their expectations as well. And then when it comes to our elections, I think we have developed some level of political maturity compared to 2007, that even though we are going to have a bit of controversies here and there, it's unlikely that it's going to substantively impact our economy in a negative way. So my expectation, and I hope it's everybody's expectation going forward, is that things are actually going to be very good, and things are actually very good now for people to make investment decisions. Yeah.
Finally, to wrap up, I want you to give a comment on the top gainer, which is Mumia Sugar, jumping by a whole 9.52%, and of course the top loser here, Sanlam Kenya, by losing by about 10.78%.
So working backwards, Sanlam Kenya, we know they gave a profit warning. So it's expected that they're actually not going to perform well compared to previous financial year. And one more point that we should highlight is that even in their half-year results, they actually had a loss, which is actually bigger than their previous full-year performance. So the expectation is that their loss is likely to be a bit bigger, and maybe this is what is happening. People are sort of getting out before the price is depressed further down. With the Mumia Sugar, it's pure speculation. There hasn't been any spate of news, I would say, that would indicate any change fundamentally on the fortunes of the company. Yeah.
Good. So for Mumia Sugar, we do not have any fundamental issue that is driving or the strengthening the share for now.
No.
Thank you very much, Edwin, for joining us here, and of course for helping us with your insight.
You're welcome.
Edwin Chui, a senior research analyst at Day and Blair, joining us here to understand the dynamics that are shaping the market. You're watching The Trading Bell, still right here.
My name is Betty Kema. What are derivatives?
A derivative is an asset whose value is based on another underlying asset or assets. For example, we can have a derivative that is based on the future value of Safaricom stock. An even more simpler example would be a lease. A lease is actually sort of a contract that is based on the value of the underlying land or property. So in that sense, a lease is actually a derivative.
Well, a historical perspective there of the Nairobi Securities Exchange, and of course factoring in who has led this organization. And with that, we come to the end of the Trading Bell for this evening. Thank you very much indeed for joining us. My name is O'Brien Kimani. My Twitter handle is @O'Brien Kimani. The Twitter handle for the show is @The Trading Bell. Our Facebook page, The Trading Bell TV show. And of course, you can follow the conversation, #TradingBell. Thank you very much indeed again. And of course, remember our SMS line is 22162. Remember always to start with the word biz. Until next week, may you have a profitable evening.